Good morning, everyone. We are so glad that you have joined us for this special edition of On the Line with AgriLife. We want to welcome our speakers today, Bart Fisher and Rebekka Dudensing, and for their help in throwing together this very special On the Line with AgriLife that's going to cover the Paycheck Protection Program, as well as the CARES Act for our small businesses, as well as our agricultural entities. So just a quick reminder, if you're interested about other On the Line with AgriLife sessions, you can get scheduled reminders through our free text messaging app. You're going to text at OTLWA to 81010. If you're interested in our next On the Line with AgriLife, that will be May 19th, and we'll be talking about integrated pest management for your garden. But today I'd like to really go ahead and kick it off with no brief introduction. We'll go a little bit long today rather than our traditional 20-minute program. We're going to start with Dr. Dudensing. She was going to be talking about the Paycheck Protection Program and especially how this affects our small businesses. We want to welcome her this morning and thank her so much. If you have questions for our speakers, they'll both do a brief presentation and then we'll go through questions that you leave in the chat box. Or feel free at the end of the presentations to unmute your mic and ask those questions. So, Doc, I'll turn it over to you.
Good morning. Thank you. All right. Well, most of you have heard about the Paycheck Protection Program, and I do have a little bit more information. I've got the slide set for this up on my website, ruralcommunities.tmu.edu. There's a small business resilience tab. So if you want to take a look at this or at some of the other resources that I have up, you can head over there. Emily, if you'd hit the next slide, please. Next slide. Thank you. So we have been hearing a lot about the Paycheck Protection Program. The funds went quickly on the first round. Funds seem to be going quickly on the second round. It's intended to support keeping people working. And we're also hearing, some questions about that. Some people rather being on unemployment because unemployment benefits are relatively generous right now. But it is intended to keep people working and keep small businesses operating. Employee compensation up to $100,000 per employee. So we're not going to be able to cover the full cost of a college football coach, but for most of us and our employees, that will really be a good amount that will definitely get the job done. We're looking at 8 weeks of last year. So using your 2019 payroll up to 8 weeks of employment and business operations. So payroll plus 25%. And 75% of the loan needs to go to payroll in order to be eligible for loan forgiveness, and I'll talk about that later. But there's some really attractive features to the Paycheck Protection Program, including there's no collateral that needs to be put up. There's 1% interest, which is an increase from what you may have seen before, but it is 1%. It's 100% guaranteed, and it's a 2-year term. So businesses have 2 years at this point under current rules to pay that back. There is only one loan per business. So a business can't say, well, gosh, I'm really only worried about this month. I'm going to put in and I'll put in next month. First of all, that money may not be there. We've seen that that's already been the case once. So they need to plan ahead. Their payroll, rent, mortgage, everything that's eligible because there's only one loan. The max loan is going to be calculated by taking that 2019 monthly average payroll, so total payroll divided by 12, times 2.5 up to a maximum of 10 million. Of course, there's no requirement that someone take out the max loan that their business is eligible for. Next slide, please. It's actually not hard. When SBA initially rolled some stuff out, including the economic injury grants, things were pretty complicated, and we were hearing a lot of complaints, but it's a 2-page application. It's 4 pages when you pull it, but 2 of them are instructions. Banks may have additional forms that they're going to require because you're going to apply through the bank, and most of the documentation will be basic tax information. So it's really not cumbersome. Farmers may be in a better position here because a lot of them do have relationships with lenders, including Farm Credit, which is one of the eligible lenders. This has been a challenge for a lot of small businesses and maybe a challenge for some of the small produce growers as well. Unbanked customers and small banks have been kind of squeezed out of some of the initial efforts here. But even the SBA is encouraging people to try multiple banks. If you have an account at a bank, whether it's a savings account, checking account, even if that's not your business account, try. Next slide, please. Okay, it is intended for businesses with fewer than 500 employees. There are some businesses with more than 500 employees that are eligible. So if somebody that you're working with thinks that I have a small business, tell them to talk to their lender. But 500 is kind of the general rule that we're talking about. Most of our small businesses that we would work with are not going to approach that. One of the key things, though, is going to be the employee's principal place of residence must be in the U.S. And I think that's particularly relevant for your region. So somebody can't live across the border and come over and work every day and be eligible for this program. If you're calculating, if you've got 3 employees and one of them is doing that, your taxes and your employee compensation taxes, workforce compensation, things like that, workers' comp, that's the word I was looking for. You include those in the calculation, but not the salary for that person who's going to be going back across the border. And then it also has implications for H-2A. It's also eligible for nonprofit organizations and veteran organizations, as well as tribal businesses. So it's not only small business, but like the county government's not going to apply. Next slide, please. Okay, loan forgiveness. The employment and salaries must be restored by June 30th of this year. So you've got to have a plan to bring those people back on board. Again, as I said, unemployment is a concern right now, and there is some discussion of changes to how Texas may manage people coming back online as we reopen the state. So we don't know yet how that's going to affect this program. There are reductions in loan forgiveness if your full-time headcount drops. So if not everyone comes back or you're not able to keep your employment at the same level as it was when you applied, if the wage decreases by more than 25% for an employee, or if you spend less than 75% of your loan on payroll. There are also penalties separate from the loan reduction, actual penalties if your funds aren't used for qualified purposes. Next slide. Okay, for farms. Farms with no employees, and this was an addition, can use their net farm income from last year's Schedule F towards the owners, multiple owners. So if there's a husband and wife or 2 brothers or parents in partnership, up to the $100,000 salary limit for each person. Of course, it's still monthly, right? You're not taking the whole 100,000, but you know the monthly salary over the 2 months. And then again, those H-2A workers are probably not eligible, but there is some discussion about that, and there are some exceptions. So talk with your lender about what they and their lawyers are recommending, because there are some differing points of opinion out there. Next slide, please. Okay, for ag and tourism concerns, thinking about people getting out in the field to harvest, as well as tourism, if the business was in operation on February 15th for an 8-week period, or looking back to last year's seasonal workers, they can use monthly average payroll for the seasonal period and average employment over that to be eligible. So some of our summer workers, whether it's tourism and they're hiring people over the summer, whether it's ag and they've got people in the fields, or people who are working in an ag tourism venture, there are ways that the lenders can help them work through seasonal employment as well. Next slide. All right, in the future, we don't know if there's going to be a 3rd round. The economic injury disaster loans for working capital are not available for COVID-19 any longer, although if there's a different disaster, let's say you have wildfires or floods, which would be strange for you, but something like that, you could be eligible for a different round. Farm eligibility, though, needs clarity, and so I'll just leave it there. And I have other sources listed for rural communities, not as much for businesses, but if your communities are saying, hey, we need some help, there's some sources that I have listed. And that's all I've got for you. So thank you.
Thank you so much. And if you'll hang on, we'll tackle questions after Dr. Fisher's talk. Dr. Fisher, if you're ready, we'll pass over to you and let you share the COVID-19 a little bit more specific to agriculture. And then we'll go into our question and answer session after he concludes his presentation.
All right, that sounds great, Emily. Thank you very much for the invitation to join you today. Thanks to all of you who are tuning in either on the phone or online. Appreciate you joining in today. We'll just jump right in. Emily, if you can advance the slides, we'll jump right in with a general overview of the CARES Act. And we actually have a report up on our website, which is just www.afpc.tamu.edu. We did a report a couple of weeks ago on the initial COVID-19 response for agriculture. Congress has really acted 3 times, and if you count last week, they've acted 4 times in response to COVID. Those first 2 phases, though, the first phase on March 4th was really just funding for federal agencies that were starting to ramp up. Phase 2 was more constituent focused, so it dealt with things like free COVID testing, unemployment insurance, so on and so forth. But it's really phase 3 that's caught the most attention. It's the one that has the most direct support available to agriculture. It's also what includes the Paycheck Protection Program that Rebekka just did a great job walking through. And so it's the one that I'll focus on this morning the most in my 10 minutes. Also, though, want to briefly mention that phase 4 is underway. Our center, the Ag and Food Policy Center, works directly for Congress and with USDA and are already getting a lot of questions and requests for input on what should be done during that fourth phase. I think that's where we'll start to see potentially even additional rounds of direct aid for producers, but then also for other segments of agriculture, be it ethanol, everything from ethanol to cotton mills. I think we could see, addressed in that 4th phase. But for now, we'll focus on phase 3. Next slide. In terms of just a general overview for ag, again, Rebekka already covered the Paycheck Protection Program. She mentioned, the fact that we've gone through a second iteration now. Fortunately, on Monday, SBA really clarified eligibility for a bunch of different business types. So whether you're a Schedule F filer, an LLC, an S corp, whatever your business arrangement, they finally stepped out and offered additional clarity there. The challenge, particularly for those of you who are agricultural producers who are applying for PPP, if you had no net farm income or net farm profit in 2019, some of those changes don't do you much good. If you had a bad year and had no or negative net farm income, then that expansion isn't going to help much. But that tool is still there. Again, Rebekka did a great job covering it. I'll leave PPP with that, but happy to answer questions if you have any. She also mentioned the EIDL program, the Economic Injury Disaster Loan Program. That is another tool, as she mentioned, for loans up to $2 million. There has been, again, as she mentioned, a lot of or a lack of clarity for agriculture. Congress did help clear that up some last week. The House voted last Thursday on H.R. 266. It was really a revisit of the CARES Act. It was called the Paycheck Protection Program and Health Care Enhancement Act. It's the bill that provided the second round of funding, an additional $310 billion for PPP. But it also made agricultural enterprises eligible for EIDL loans. And so that is a new pathway available to agricultural producers with, again, that have no more than 500 employees. But again, both of these programs, there's a lot of demand and it's first come, first served. And so there have been a lot of challenges. Again, happy to talk through those in Q&A. The part I will focus, though, on is the assistance for agriculture. One of the first things that I'll mention is on the marketing loan changes. This was addressed directly in the CARES Act, and USDA has since put out additional information. For those of you who may take out marketing loans, so if you've taken LDPs or POP payments in the past, or if you've had marketing loan gains, those originate through the marketing loan. That program typically has a 9-month maturity. The loan matures after 9 months. That has been extended to 12 months now, so you have up to 12 months to repay commodity loans. The maturity extension applies to the 18, 19, and 20 crop years. There are several other requirements there. For example, that all new loans requested by September 30th of this year are the ones that will have a maturity date of 12 months following the date of approval. For those of you who are watching online, we include a list of eligible commodities there. For those of you who are just listening in, that list of commodities is really the loan eligible commodities and including unshorn pelts. And so typically, if you're a loan eligible commodity, you're going to be eligible for this extension as well. One of the other changes then on the next slide has to do more with direct assistance for agriculture. The CARES Act included essentially a couple of pots of money for providing direct support. The first was that it provided $9.5 billion to the Secretary, really with no strings attached. It was to prevent, prepare for, and respond to the coronavirus by supporting ag producers. And there were a couple of producer groups that were called out in particular, but really the Secretary, there's really no strings tied to it. The other is a replenishment of the CCC, the Commodity Credit Corporation. That's the funding arm of USDA that funds all the programs that many of you will be familiar with, the ARC and PLC program, the marketing loan program we just talked about as an example. USDA can borrow up to $30 billion a year in making those payments, and then Congress will fill the pot back up. It's essentially USDA's credit card that has to occasionally be paid off by Congress. And so they paid it off to the tune of $14 billion. So if you add those two together, you're really looking at $23.5 billion that's available to USDA. There's also additional authority on commodity purchases. I won't dwell on that today, but if you have questions, I'm happy to delve into that as well. So on the next slide then, if you think about it going into this, that Congress provided $23.5 billion. On April 17th, President Trump announced the creation of what's called the Coronavirus Food Assistance Program, or CFAP, that will provide up to $19 billion in aid. And you think, well, that's short of the 23.5. What's going on there? Well, the $14 billion in CCC replenishment doesn't really come online until July. And so the Secretary is using existing CCC borrowing authority that he had, combined with the $9.5 billion, to roll out this initial program of $16 billion in direct support to farmers and ranchers. The other $3 billion that makes up the 19 is going to be for commodity purchases. Again, can answer questions, but I'll focus on the $16 billion. Regarding that $16 billion in support, USDA has said that 85% of that is going to be, or they're going to focus the majority of it on covering up to 85% of losses on products marketed from January 1 through April 15th. For commodities experience a 5% price decrease. And so that captures everything from cattle to cotton, again, with that 5% price trigger required. They're also then going to cover 30% of expected losses after April 15th. There have been a litany of questions, concerns surrounding that. For example, if you've got calves that you marketed prior to April 15th and your neighbor has calves marketed after April 15th, it's certainly, and USDA's indicated that the rates are going to be different. A lot of folks have weighed in that doesn't necessarily make a lot of sense, but it's ultimately USDA that decides how these programs are run. I think to their credit, it's probably a good sign that this has not, the details haven't been released yet, because it means they're still working on it. And we, the USDA, Capitol Hill, both House and Senate offices have been reaching out to our Center for Input. And so I think it's a good sign that they're still working on that. There were press reports that it's already gone to OMB for review and approval, but indications that we have are that it's actually still under review at USDA. That also includes on the payment limit. USDA has said there's a $125,000 payment limit, with up to $250,000 per person or legal entity, which has also caused a fair amount of concern. So the other thing I will just briefly touch on then is to draw your attention on the next slide to a report that we've done in our center looking at COVID-19 impacts on Texas production agriculture. To suffice it to say, it's having a huge impact. All of you on the phone or watching online know that. The bottom line for us is that really the biggest impacts are demand driven, as our supply chain, which is the most efficient in the world, switches from consumption away from home to consumption at home. That has a huge effect. And if we don't see a rebound, we've estimated in that report that losses to Texas agriculture alone could reach $6 to $8 billion this year relative to 2018 levels, which were the latest published estimates. Next slide. The one I will draw your attention though too is going forward for the 2020 crop year. Much of USDA's focus has been on either carryover production or production that's being marketed right now. What about crops that are being marketed this fall? That's one that our center is focused on in particular. For some folks that think, well, harvest is a long way away, that's out of sight, out of mind. We like to keep this issue on the radar. If you look at where we are in terms of crop insurance, using cotton again as an example, we're going into this crop year with a 68% price election. Well, most of our growers have 70% coverage or less. If you have normal yields, that means prices would have to fall to 47 cents before crop insurance ever kicked in. And so for those who think that, crop insurance is unquestionably important to production agriculture, but for those who think, well, there's nothing to worry about because we have that, we're constantly reminding folks, particularly in Washington, D.C., that there is a lot of exposure our growers are facing, and want you to know that we're working on your behalf with the congressional delegation and with USDA looking at solutions. Finally, and I know I'm bumping up against my 10 minutes, so the last thing I want to put on your radar does not have to do with COVID, but for those of you who are trying to cash flow and looking for liquidity right now, I want to draw your attention to changes that were made in December by the appropriators, something that Ranking Member Conaway from the 11th District there in Midland, and also Ranking Member Granger on House Appropriations worked hard on in December, was to make quality losses of crops, drought, and excessive moisture eligible for the WIP Plus program. This was the program created in response initially to Hurricanes Harvey and Irma and Maria back in 2017. Drought has now been added to that for counties that had a D3 drought or higher. I talked to a lot of producers around the state, and it's concerning to me that I still encounter folks who haven't even heard of this. Sign up began at FSA on March 23rd. There isn't currently a deadline, but I would encourage you to reach out to your FSA office about potential eligibility. Not every county, if we look at the final slide here, a map, not every county in District 6 is necessarily eligible. Certainly not for the drought-based assistance, but several of them are, certainly on the eastern side of District 6, and then for your neighbors further to the east. There are several counties that are going to be able, I think in District 6, there are 3 that will be eligible for both 18 and 19, and it could mean a significant amount of support coming. And so while we're waiting on additional details for coronavirus aid, this is something that you can be inquiring about now. So with that, thanks again for having me. Look forward to your questions. And with that, I'll stop there.
Wonderful. Thank you so much. And thank you everybody for tuning in today for On the Line with AgriLife.